Imagine you just closed on your dream home in Orlando. You bought it specifically because of the free solar panels advertised in the listing. The seller said they were paid off. Your agent confirmed it. But 18 months later, you get a letter. It's a bill for $45,000 in principal debt and $12,000 in overdue interest. You call the title insurance company, frantic, and they tell you the words that every homeowner in Florida should fear. We don't cover that. This isn't a hypothetical horror story. It is a documented reality for many Floridians caught in a series of legal and financial loopholes. Today, we're exposing the architecture, the legal, financing, and engineering that has turned Florida's solar industry into a minefield for the residential real estate market. Florida's the Sunshine State. We have the third highest solar potential in the entire country. On the surface, the numbers look great. Interconnections have exploded from just 577 in 2008 to nearly 250,000 today. But while the technology is sound, the industry has been infiltrated by bad actors using Florida's complex property laws as a weapon against unsuspecting homeowners. The deception almost always starts at your front door. Sales representatives frequently claim they represent a mandatory government program or that the system is being provided at no cost. Florida Attorney General Ashley Moody already cited several major firms for systemic fraud. Vision Solar, which filed for bankruptcy in late 2023, was accused of gaslighting customers, telling them that they were signing pre-approval forms when they were actually signing binding contracts. They reportedly targeted seniors and people with intellectual disabilities, leaving them with non-functioning hardware and massive debt. MC Solar allegedly took large down payments and then abandoned the projects. Yet, they still threatened homeowners with liens for systems that never even worked. These representatives also consistently misrepresent tax incentives. While the Inflation Reduction Act originally had extended the credits through 2032, the newer law, one known as the Big Beautiful Bill, officially terminated the homeowner-owned 30% tax credit on December 31st, 2025. If you're expecting to buy solar in 2026 and expecting a 30% check from the IRS to help you with your down payment on your loan, you're being lied to. Even when a system is installed correctly, the way the lien is filed creates a massive hurdle for the real estate market. Most solar loans in Florida are secured by a UCC-1 financing statement. This document classifies the panels as personal property, like a car, rather than a fixture of the home. This leads to what we call the silent lien, because UCC filings are often recorded with the Secretary of State instead of local land records. Standard title company searches miss them entirely. Here's the unfortunate reality. Traditional title insurance protects real property, not financed equipment attached to it. A solar lender files a UCC-1 against the seller and claims a security interest in the panels as personal property. Because the panels are legally classified as equipment, not the land itself, a title company can easily miss it and still argue that the home's title was technically insurable. The buyer did not assume the debt and is usually not personally liable for the loan. However, the lender still has enforceable rights to its collateral. That collateral is now physically attached to the buyer's roof. This is where homeowners get blindsided. New owners in Florida have closed on homes believing the solar was paid off, only to later discover an active UCC filing. They didn't inherit the loan, but they did inherit the problem. The solar company cannot normally sue the buyer for payments, yet it can repossess the system or block a future sale until the balance is satisfied or a termination is filed. In the real world, that functions like a lien, even though it's technically not one. And it can surface years later when the owner tries to refinance or sell. We're covering a grandmother's loss and a disabled veteran's foreclosure next. If you want to know what the sales reps are hiding from you before you sign, hit that subscribe button and turn on the notifications. Our goal is to provide the data that protects your equity. The second video in this series, the specific blueprint for doing solar correctly in 2026, drops in 2 weeks. Subscribe now, and it'll be waiting for you. Hey, let's look at PACE, Property Assessed Clean Energy. It's pitched as no credit check, no money down. In Florida, PACE is a super priority lien that takes precedence over your primary mortgage. This creates two distinct paths to losing your home. The first is through a tax deed sale. Take the case of Angela Wiley in Orlando. She believed her solar related upgrades were a grant, but the debt was actually added to her property taxes as a $1,521 annual assessment. When she fell behind, her home of 34 years was set for a tax auction, even though her primary mortgage was current. The second path is a failed financing foreclosure. Look at Esteban Ortiz, a disabled veteran in Highlands County. He signed up for PACE Solar, but because his county did not permit residential PACE, the funding never arrived. The contractor installed the panels anyway, and when they weren't paid, they filed a private mechanics lien. Despite being current on his mortgage, Ortiz was forced into bankruptcy to stop a judicial foreclosure on his home in January 2025. Finally, we have the physical hazard. Florida is a hurricane state. The building code mandates that systems in high velocity hurricane zones must withstand 160 mile per hour winds. Deceptive installers often use standard racking that lacks a Miami-Dade notice of acceptance or Florida product approval. During a storm, these systems become sails, capable of ripping the structural trusses right out of your roof. But there's a more common everyday crisis. Florida insurers are now aggressively non-renewing policies for roofs over 15 years old, unless they pass a strict inspection. This is the breakdown. Your solar panels are designed to last 25 years, but your roof may be flagged for replacement by your insurer after just 15 years. You now have a working solar system that must come off for a re-roof. The cost to remove and reinstall those panels is typically between $5,000 and $10,000. That free solar savings is wiped out in a single afternoon by a maintenance fee that was never disclosed in the sales presentation. We've seen the pitfalls, the bankruptcy of firms like Vision Solar, the super priority liens that bypass mortgages, and the $10,000 re-roofing complications. It is enough to make any homeowner swear off renewable energy forever. But the technology isn't the problem. The process is. There are ways to buy solar in Florida that actually protect your home's value and your bank account. In our next video is the solution, how to actually buy solar. We will be breaking down safe financing through local credit unions, the exact nonprofit funds like SELF that offer lower rates, and the engineering certifications that act as your shield. That video drops in 2 weeks. Subscribe now and it'll be waiting for you. Get the data you need to do it right. Hey, this has been Tom McNamara, your Florida real estate insider. I'll see you in the next one.